In the popular imagination, wars in space are expected to look dramatic, with missiles streaking across the sky and satellites exploding into clouds of debris. But the real transformation of space into a battlefield is unfolding far more quietly. Inside insurance contracts, financial risk assessments, regulatory filings, and corporate balance sheets, where access to orbit can be denied, not by weapons, but by economic pressure that is almost invisible to the public, yet have a strategic effect. Before we move forward, please like, subscribe, and share Strategic Vanguard, and be up to date with the latest news and happenings from the world of defense and strategic affairs. Tune into our video channels in Rumble and YouTube. And if you want to hear the audio version, please tune into Strategic Vanguard Deep Dive in Spotify. Over the past 2 decades, space has shifted from a state-dominated military domain into a commercially driven economic ecosystem, where private companies now own and operate the vast majority of satellites, provide essential services to governments, militaries, banks, shipping companies, telecom providers, and even emergency services, and increasingly shape how conflicts are supported, sustained, and even constrained, not by ideology, but by profitability and risk exposure. Modern militaries rely heavily on commercial satellite imagery, civilian navigation signals, private broadband networks, and privately operated data relay systems, meaning that the operational effectiveness of armed forces is now deeply tied to the health, financing, and legal protection of corporate assets that were never designed to operate inside active conflict zones, and yet are now central to every modern battlefield. This dependence creates a strategic vulnerability that traditional military doctrine struggles to address, because while armed forces can protect bases and ships, they cannot easily shield corporate insurers, lenders, or satellite operators from market panic, regulatory pressure, or litigation, all of which can shut down services faster than any kinetic strike and with far less political consequence. Space insurance plays a critical and often misunderstood role in this system, because almost every satellite launch, orbital operation, and data service contract depends on insurance coverage, not just to protect against accidents, but to secure financing, attract investors, and satisfy regulatory compliance, making insurers silent gatekeepers of who can operate in orbit and under what conditions. A satellite that cannot obtain insurance is usually a satellite that cannot secure loans, cannot finalize commercial contracts, and cannot be legally launched by responsible providers. Which means that denying insurance does not merely increase costs, but can effectively block access to space altogether, turning financial risk assessments into tools of strategic exclusion. Insurance premiums themselves are highly sensitive to geopolitical risk, conflict proximity, debris density, launch reliability, cyber vulnerability, and even diplomatic tensions, which allows underwriters to indirectly influence orbital behavior by making certain regions, routes, or partnerships economically unattractive without issuing any formal political directive. In practical terms, this means that space access can be restricted, not through sanctions that attract headlines, but through technical risk classifications that appear neutral and market-driven while achieving similar strategic outcomes. A method that offers plausible deniability and avoids triggering formal retaliation thresholds under international law. Financial institutions follow similar risk logic because satellite operators require continuous capital inflows for manufacturing, launch services, insurance renewals, spectrum licensing, and data infrastructure, all of which are vulnerable to sudden shifts in market sentiment triggered by political developments, regulatory changes, or even rumors of potential conflict escalation. When investors become uncertain about the long-term viability of orbital assets in politically sensitive environments, funding dries up, projects stall, and expansion plans collapse, turning strategic competition into a contest over capital flows rather than missile inventories. This transformation effectively shifts space conflict into the realm of geoeconomics, where the objective is not to destroy enemy capabilities directly, but to make them financially unsustainable, legally risky, and commercially isolated, a method that mirrors maritime insurance denial in wartime shipping lanes, but now operates on a global orbital scale. Commercial satellites have also become strategic infrastructure in ways that blur the distinction between civilian and military targets, because systems designed for agriculture monitoring, disaster management, logistics optimization, and urban planning are simultaneously used for troop tracking, missile damage assessment, naval surveillance, and real-time battlefield intelligence. This dual-use reality complicates traditional laws of armed conflict, because assets that are legally civilian become operationally military the moment their data is integrated into defense networks, yet they remain insured, regulated, and financed under commercial frameworks that were never intended to operate inside combat environments. As a result, states seeking to degrade an adversary's space-enabled military advantage can apply pressure not through overt military actions, but through legal challenges, regulatory restrictions, export controls, licensing delays, and insurance exclusions, all of which target the economic foundations of space operations rather than the hardware itself. This approach avoids the creation of space debris, reduces escalation risks, and minimizes international condemnation while still achieving meaningful degradation of strategic capabilities, making it highly attractive for gray zone competition where open warfare is politically costly or diplomatically undesirable. Commercial mega-constellations add another layer of strategic complexity, because when private firms control thousands of satellites that form the backbone of global connectivity, they effectively operate critical infrastructure that rivals traditional state communication networks in both scale and importance. These corporations become geopolitical actors by default, not because they seek political influence, but because their operational decisions, service availability, and contractual obligations can shape battlefield connectivity, disaster response effectiveness, and even economic resilience during crises. States in turn influence these corporations not primarily through military threats, but through regulatory leverage, spectrum allocation, tax policy, licensing authority, and insurance frameworks, all of which can be weaponized subtly to steer corporate behavior in line with national strategic interests. In this environment, the battlefield shifts from physical confrontation to institutional control, where the real contest is over who shapes the rules, standards, and risk models that govern access to orbital services. This evolution is particularly significant for emerging space powers, including India, which are expanding their commercial satellite ecosystems while still relying on international insurance markets, global component supply chains, and multinational launch partnerships that remain vulnerable to geopolitical turbulence. Dependence on foreign insurers means that shifts in global risk perception can directly impact national satellite programs, delaying launches, raising costs, and complicating financing structures, even when domestic technology and launch capabilities are available. Similarly, reliance on global semiconductor supply chains, propulsion components, and sensor technologies introduces additional economic pressure points that can be exploited through export restrictions, regulatory scrutiny, or contractual disputes, further tightening the economic vice around space operations. This creates a strategic imperative not only for technological self-reliance, but also for financial and institutional resilience, including domestic insurance pools, sovereign underwriting mechanisms, and public-private coordination frameworks that can absorb shocks without collapsing commercial viability. Without such mechanisms, space capability becomes contingent not on engineering competence, but on market confidence, which is far more volatile and susceptible to external manipulation. Legal ambiguity further amplifies these vulnerabilities, because international space law has not kept pace with the commercialization of orbit, leaving unresolved questions about liability, targeting, data usage, and the legal status of dual-use satellites during armed conflict. These gray zones allow states to pursue lawfare strategies that weaponize arbitration, regulatory complaints, and treaty interpretations to impose costs on adversaries without engaging in overt hostilities. Insurance disputes become legal battlegrounds, contract terminations become strategic signals, and compliance investigations become tools of geopolitical pressure, transforming corporate risk management into a proxy theater of conflict. In this context, economic warfare in space begins to resemble financial warfare on Earth, where sanctions, banking restrictions, and market exclusion shape geopolitical outcomes more subtly, but often more effectively than conventional military action. The objective shifts from territorial control to system disruption, where denying reliable access to navigation, communication, and data services can paralyze logistics, financial markets, transportation networks, and emergency response systems without firing a single shot. Because modern economies are deeply synchronized through satellite-dependent timing systems, global positioning, and high-frequency trading networks, even short disruptions can ripple across entire financial ecosystems, multiplying the strategic impact of relatively small technical or regulatory actions. This interconnectedness makes economic pressure in space particularly potent because it affects not only military operations but civilian confidence, investor sentiment, and political stability, all of which are critical to sustained national power. From a strategic perspective, this represents a shift from deterrence by destruction to deterrence by disruption, where the threat is not annihilation, but systemic fragility and cascading economic consequences. This model also lowers the threshold for engagement, because economic and regulatory actions can be justified as commercial risk management rather than acts of war, allowing competition to intensify without triggering formal security commitments or alliance mechanisms. Over time, this normalization of economic coercion in orbital domains risks creating a permanent state of low-grade strategic conflict, where markets, insurers, and regulators become instruments of state power whether they intend to or not. For military planners, this requires a fundamental rethinking of space resilience, because protecting satellites physically is no longer sufficient if financial collapse, insurance withdrawal, or regulatory blockage can disable entire constellations without touching the hardware. Resilience must therefore extend to financial structures, legal safeguards, supply chain diversity, and institutional coordination, integrating economic defense into national security planning rather than treating it as a separate commercial concern. Public-private partnerships become strategically critical not merely for technological innovation but for economic continuity, ensuring that commercial operators can maintain services during crises without being forced into shutdown by financial or legal constraints. This also raises difficult questions about sovereignty, because when private corporations control essential infrastructure, states must balance regulatory oversight with operational autonomy, ensuring national security without undermining the very commercial ecosystems that sustain space capability. In effect, national power becomes distributed across corporate networks, financial institutions, legal systems, and technological platforms, making strategic competition far more diffuse and harder to deter through traditional military signaling. This diffusion complicates escalation management because economic attacks can accumulate gradually, producing strategic outcomes without a clear triggering event that would justify conventional retaliation. As a result, conflict becomes continuous, incremental, and often invisible, unfolding through market dynamics rather than military mobilization, and leaving policymakers struggling to define where competition ends and war begins. In such an environment, strategic advantage increasingly depends on institutional resilience rather than firepower alone, favoring states that can integrate financial regulation, industrial policy, legal strategy, and technological development into a coherent national security framework. For India and other rising powers, this presents both a challenge and an opportunity, because building resilient space economies can provide strategic insulation while also positioning them as stable service providers in a volatile global market. Developing domestic insurance capacity, strengthening regulatory predictability, investing in secure supply chains, and promoting public confidence in orbital services can transform economic stability into strategic leverage. Conversely, failure to address these economic dimensions risks leaving even technologically advanced space programs vulnerable to external manipulation through market mechanisms that operate beyond direct government control. Ultimately, the weaponization of space insurance and commercial satellites signals a broader transformation in how power is exercised in the modern world, where economic infrastructure becomes as strategically significant as military hardware and financial resilience becomes a form of national defense. The future of space conflict is therefore unlikely to be dominated by spectacular battles in orbit, but by quiet struggles over contracts, coverage, compliance, and capital, where strategic outcomes are decided long before any physical confrontation occurs. Understanding this shift is essential for interpreting modern geopolitics because it reveals how competition is migrating into domains that are legally civilian, commercially driven, and politically ambiguous, yet strategically decisive. Space, once imagined as the ultimate high ground of military power, is increasingly becoming the ultimate marketplace of strategic influence, where control is exercised not through weapons, but through economic access and institutional authority. In this emerging reality, the true battlefield is not the vacuum of orbit, but the dense network of financial, legal, and corporate systems that make space operations possible. And it is within these systems that future conflicts will most often be fought, and in many cases, quietly won.
Thank you for joining us on this Strategic Vanguard deep dive. If you found value in this analysis, don't forget to like, share, and subscribe to our channel. We bring you fresh deep dives every Wednesday and Saturday here on YouTube and Rumble, and you can also catch the audio versions on Spotify and Amazon Music. Just search for Strategic Vanguard Deep Dive. For more insights, articles, and discussions, subscribe to our blog at strategicvanguard.com. Your support helps us grow and bring you more in-depth analysis on defense, geopolitics, and strategy. Until next time, stay informed, stay strategic.